So what are we waiting for to call this a crash? Dow Jones dropped today 400 points, dropped 1.5%. S&P 500 dropped close to 2% as well. Nasdaq dropped 300 points. So Nasdaq is where you'll find Facebook, Nvidia, Google, Amazon. And the biggest loser on my watch list is Nvidia, dropping 12% today. I bought this on Friday at 164, closing today at 144. I was actually going to place an order today at 145, but when I was watching it, it was trading at 148, and I was like, it's not going to reach 144. I'll just look at it tomorrow. And it closes the day at 144.7. Took a strong drop in the last 30 minutes. And do we know why it dropped so hard? So the explanation we have here is that is because of their weak forecast. And because it was a severe miss, they're saying it's going to continue to drop and it's not going to bounce back right away. So Apple dropping again today. Even after last week, Warren Buffett or Berkshire Hathaway disclosed their holdings. Now, the number one holding for Berkshire Hathaway is Apple, and the stock is still dropping after this. So number one stock that Warren Buffett is holding is Apple, with putting in $46 billion. And yet that's not good enough. Now, should we care that Warren Buffett bought Apple, or is it that it's the number one holding for Berkshire Hathaway? In my opinion, definitely. I mean, you got to give respect where it's due, or give credit where it's due. I mean, this guy, first of all, this is his job. He spends more time researching companies. Not only that, but he's got way more experience than anyone else researching companies, and he's got a track record. So if there's anyone that I would follow blindly, it's definitely Warren Buffett. So if he buys a stock, I'm definitely going to look into it. But just because he bought a stock doesn't mean you just go buy it at any price. It's important the price that you buy it at is important. So even if you hear a lot of people saying that you buy long term, you don't care about the short term fluctuations, but how are you going to make profit from just holding a stock? This stock pays 1.5% dividends per year. That's not a decent return. So the only way to make profit from a stock is from buying low and selling high, so a capital gain. So you need to buy low. And by buying good companies, you increase your chances of selling higher. Now, 185 at that point was the last time he came out on CNBC and it announced that he bought several million shares of Apple. So now it dropped back down to that price. So who knows, he might have sold some, because this year is as of September 30th. So it was announced in November, but it's the holdings as of September 30th. So maybe he sold some Apple shares when it was trading at 220, for example, in October. But probably not. He's more of a long-term holder. But yeah, just because Warren Buffett bought Apple, I definitely have confidence in buying the stock. I personally bought it at 195, but I've got another order to buy in at 184. But it's just amazing to see how the stock has nothing to do with the company's performance. The stock price does not represent the performance of the company, or is not correlated or directly correlated with the performance of a company. So when you watch a stock of a company that's performing very well and the stock price just drops, it's a perfect buying opportunity. And everything in tech is dropping. It dropped hard today. It doesn't make sense. It's not like something bad happened with each of these individual companies at the same time. Google's looking good. I've got an order at 1,000. It reached 1,016 today, but I'm sticking with my order. Although it's not a big difference, but I want to buy it at 1,000 and maybe sell it at 1,300 or even 1,500. Amazon also dropped, part of the Nasdaq, so it dropped 5% while the Nasdaq dropped 3%. I bought last week at 1,600. I'll probably buy more if it breaks the 1,400s or the 1,500s. It's got a target price of 2,100, and for sure after holidays, the stock is gonna go up after earnings. I put an order today on MasterCard at 185. So it's giving me a chance to buy in. So 1 year, 52-week high is 225. It's got a 1 year target price of 233, and it's just a stock that just keeps going up like an arrow. If you look at 5 years, look at this stock is just straight, and now it's dropping a bit, and so it's giving me a chance to buy in. So I've got an order at 185. Pays very little dividends, so I'm not going to make money off dividends. Going to make money off selling it at a higher price. Now, if I could buy 100 shares of this, I would be able to sell covered calls while I wait for the stock to go back up, so that I'd be able to generate revenue from the stock by selling covered calls. And I'm sure that's something Warren Buffett is doing with his holdings, because a lot of his stocks don't move much. For example, Coca-Cola, I think it's like his fourth biggest holding is Coca-Cola, and Coca-Cola has been trading in the 40s for the past, I don't know how long. Coca-Cola has been trading in the 40s since 2014. Just recently did it reach 50. Did it surpass the 50 just this week. So how does he make money off Coca-Cola? It's not from the 3 or 4% dividends. That's nothing. That's not a Warren Buffett return. So for sure he must be selling covered calls while holding this stock. I mean, from $40 to $50 in 5 years, that's 25% in 5 years. So that's a yearly return of 5%. But if he sells covered calls on his holdings, for example, so let's say he buys this stock at $50 right now, and he wants to sell covered calls that expire in a month, so December 21st, let's say. Let's take December 28th, looks like it has more strike options. Now, if Coca-Cola doesn't move much, he could take a strike price of, let's say, 52 or 52.50. So let's say 52 for example purposes, or 52.50, which is a 5% increase. And he sells a strike price at 18 cents. Now he's got 400 million shares of Coca-Cola. Now, of course, he's not going to be able to sell options, 400 million shares. So 100 shares is one option contract. Now, of course, he's not going to be able to sell 4 million option contracts because there's just not enough people buying. But let's say he sells at 18 cents. Now, theoretically speaking, imagine you could sell covered calls on all your shares or on 400 million shares. That would be an extra income. That would be an extra income of 72 million per month that we'd be making just by holding Coca-Cola. In terms of dollars, it's definitely a good amount. You also heard that he bought some JP Morgan Chase, so definitely a great stock to buy. But of course, the price is important. Probably didn't buy it at 110, probably bought it at 100 or even lower, because this is the holdings as of September. So in September 30th, it was trading at 115, so probably bought it before. Actually, as of June, he did not own more JP Morgan Chase. So, and end of June, it was trading at 104. And as of September 30th, he bought some JP Morgan Chase. So that means he probably bought it somewhere between 110 and 114, actually. So if you buy it at 110, it'll probably be the same price that he bought it at. But in the last 5 days, it was actually trading at it dropped all the way down to 106. So you could have actually bought it cheaper than what Warren Buffett bought it at. But once again, the way he's going to make money with this stock is a little bit of dividends, but mostly selling covered calls on this stock. And obviously, being a long-term holder, will probably sell at a decent capital gain. Now, 5 years ago, the stock was trading at 58. So in 5 years, the stock doubled. See, I mentioned this many times, that this is why I don't like holding long-term, because look, if you had bought this stock in 1999, it was trading at 55, and you never sell and you just keep collecting dividends. Well, in 2018, it's only trading at 110. So you would have doubled in 18 years, which is not a good return on the stock market. Now, of course, if you had bought in 2009, it was trading at 15, and now 10 years later, it's trading at 110, then you have a decent return. So it's still important to sell. You're not going to hold forever, because the growth remember, Warren Buffett bought most of his stocks in the 60s. The growth that occurred from the 60s to the 80s and 90s is not going to happen again. In 1980, JP Morgan Chase was trading at $5 or $6. Best Buy is also looking good. I had an order at $60, but I canceled it. But I think I'll put it again. It's getting very close to $60. This is a stock that usually goes up after holidays, so it could be a good buying opportunity. Pays 2.5% dividends. 52-week low is 55 though, so it's getting close to it, but still quite far from it. Still could be a good buying opportunity, not sure. Facebook, of course, beautiful Facebook. I bought some today at 136.50. I had an order at 135 last week. I changed it to 136.50. Then I forgot to change it back to 135, and the order got executed today. Doesn't matter, not a big difference. But so yeah, I bought some Facebook shares again at 136.50 today, closing at 131. So more silly news for why the stock is dropping, but creating a buying opportunity for many. 1 year target price is 196, but this is a stock you can probably hold 5 years and sell at 300 easily. Visa also is giving us a buying opportunity, but I just prefer MasterCard. Just as a product, as a consumer, I prefer MasterCard, but it's also a good stock to watch. I think MasterCard dropped a bit more compared to Visa. It's further from, MasterCard is further from its 52-week high. So the fact that Warren Buffett is buying stocks, what that tells me is he'd rather hold stocks than cash. So that means he trusts that stock market is still safe, probably not going to crash anytime soon. Because if he can predict that it's going to crash, he's not going to be buying stocks right now. He'll keep the cash. So it gives me confidence to buy stocks right now, but obviously very important to also not just to buy anything, buy quality stocks that are not going to go bankrupt, but buy them at the right price. Great way to start is just to look at what stocks Warren Buffett holds and just buy them when they are relatively cheap. So I know he just sold some Philips, so this is a good stock to watch. Maybe see if it drops a bit, maybe buy in. So the stock that went up the most on my watch list is Bombardier today, 24%. So if I had bought this on Friday at $1.75, could have sold today at $2, would have made what, like 15 or 16% in one day. So regardless, so I bought this stock at $2 on Thursday, and yeah, Friday dropped all the way down to 167, I believe, and now it's back up to $2. And it's funny, the reason it dropped on Friday apparently is because of executives being paid unfairly. So the reason it dropped on Friday apparently is because there was an investigation going on to see if executives are being paid too much and unfairly. And now today news come out that it's just a routine investigation and the stock goes back up. It's like, I wonder if it's the same people who sold on Friday that bought back today. I really find it such a game. It doesn't make sense. Oh no, Bombardier is being investigated, or the executives are being investigated, so let's sell. Okay, false alarm, let's buy back again. So I don't really look at what went up usually. I usually look at what went down to look for buying opportunities. So yeah, right now I'm looking at, I want to buy some more Nvidia, some Facebook, maybe some Amazon, some Google. So basically the ones that are dropping the most, the ones that are pretty big and the ones I have a lot of confidence in that are not going to disappear. Yes, the tech industry is usually the riskiest because it's the most volatile. Actually, I think pharmaceutical industry is very volatile, but the tech is also pretty volatile. But I mean, Google, Amazon, Facebook, I honestly feel like they aren't going anywhere. If anything, they're just gonna keep growing, regardless of the hate they're getting right now. Just wanted to mention one last thing. If we look at the Dow Jones in 1985, it was trading at 1275, and in 2000 it was trading at 11,000. So let's say just around. So let's say 1100 divided by 1200, 11,000 divided by 1200. So that's an 816% return in 15 years. 816% return 15 years. If you compare from 2000 to 2015, let's say, another 15 years, so 17,000 to 11,000, so that's a 54% return. So why from 1985 to 2000 we had an 800% return, but from 2000 to 2015 we only had a 54% return? So not every 15-year period is the same. And that's why I don't like holding long term, because the growth that we experienced in the 60s, the growth that we experienced in the 60s, 70s, and 80s and 90s is not going to happen again. Although Warren Buffett says the Dow Jones should hit 1 million in 100 years, but who cares? And that other billionaire Barron said that it's going to hit 50,000 in 50 years. I don't know where they're getting It's going to hit, sorry, 500,000 in 50 years. I don't know where they're getting those numbers. Holding long term might not, just because it was very profitable in the past, it might not be as profitable in the present and in the future. As you can see, just from 2000 to 2015, we had a 58% increase, but from 1985 to 2000, we had an 800% increase. That's like two different numbers completely. So although the Nasdaq dropped 3% today, the biggest movers in the Nasdaq, of course, were Nvidia, that dropped 12%. So it dropped four times more than the index that it belongs to. You have Facebook that dropped close to 6%, Amazon 5%, Google close to 4%. So Google close to the index. Applied Materials almost 3%. So the Dow dropped 1.5% today, but the biggest movers in the Dow, you've got Caterpillar at 3%, you've got Boeing at 4.5%, you've got Apple at 4%, Microsoft 3.5%, Visa almost 4%. So instead of buying the index, I prefer to buy these individual companies so I can benefit from the movement. So that was my stock market update today. If you have any questions, leave them in the comments below. Any stock tips, I'm always open to stock tips. Leave them in the comments below. Like always, if you're going to open an account with Questrade, use my referral code in the description below the video to get between $25 and $250 back, depending on your deposit. And if you're an active trader, there's also a link where you can get $50 in free trades. Thanks for watching.